Hey folks, in this video we're going to be discussing a very easy swing trading strategy based on the bear flag pattern and the 50-day exponential moving average. This strategy can help traders identify potential short selling opportunities. You don't have to be an expert to understand this strategy. As a beginner, you will be able to understand this strategy. Now let's get started. The first step in the strategy is to identify a bear flag pattern. Before we go to the chart, let me show you what a bear flag pattern looks like over here. And this is how a bear flag pattern looks like. It's like an upside down flagpole. This pattern is created by a strong downward movement in the price followed by a consolidation. So the downward movement is the pole and the consolidation is the flag. Once we have identified the flag of the bear flag pattern, we will look for a breakdown below our lower trend line on the channel. This is the signal that the Forex pair is likely to continue its downward trend, providing a potential selling opportunity for us. Now let's go to a chart. We're looking at the Euro-US chart here. We can see that the price is moving down, but just as a confirmation to confirm our downtrend, I'm going to add the indicator EMA here. Let's add the exponential moving average over here. And let's change that to 50. Let's change the thickness a bit. Okay, I have added the 50 EMA here. Now that's just for confirmation that the chart is moving down. We have our candlesticks below the 50 EMA. That's just a confirmation that it is a downtrend. Looking at this chart, you could easily spot the upside down flagpole, which is a bear flag pattern. Right here, we have the pole and we have the flag over here. Now let me just redraw this with the proper line for the pole. I'm drawing it here. That's my pole. And I'm going to use a parallel channel for the flag. Now we have a nice and neat upside down flagpole, which is a bear flag pattern. And this channel over here, this parallel channel, when it breaks out of this channel, that means the downtrend will continue down. So we could take a trade over here when it breaks down. We could place a sell order on this area here. When it breaks down from the parallel channel, which represents the flag, it will continue its downtrend. Now, how do we place the take profit and the stop loss for this particular order? It's very easy. You just take the flagpole that you have drawn over there and move it across to the other end of the parallel channel and move it down where the break would happen. Similarly, where your entry would be. So this end here would be your take profit. Similarly, the stop order would just go just above the parallel channel here. Just right there where you would place your stop order. Let me show you guys with the short position tool here. And the short position tool right here, that's our stop order. And this is our take profit. So that's about 620 pips. If you trade a standard lot like me, that's $6,200. If you trade a mini lot, that's 620. If you're a beginner, if you're just trading a micro lot, that's $62. Let's say what your risk would be. This trade has a 2.8 risk to reward ratio. That means for every dollar you risk, you would be making $2.8. For a standard lot, it's like a 2,200 risk for a 6,200 reward. Okay, now the chart has broken out of the flag. We have entered the trade. It's following our flagpole just like the earlier movement down before the consolidation. So now it has hit our take profit. Okay, let's just review the trade over here, the trading strategy. First, we made sure there's a strong downtrend by just looking at the chart first, making sure it's going down. Then we put in a 50 EMA to confirm our downtrend. Then we spotted the bear flag pattern. We waited for the break of the flag. we entered a sell trade with the take profit being the same length of the earlier down movement and the stop loss being just above the flag consolidation pattern. Just one more tip before we finish off this video. In addition to confirming the downtrend with the EMA could be used for rejection as well. As you guys could see over here, the flag pattern kind of rejected at the EMA and broke all the way down and went to our take profit. Pattern is so frequent, you guys could easily spot this pattern on any chart. If I just zoom out on this chart alone, we could find many flags patterns. There's one right here and the second one here. Second one could have tested your stop order, but be a little liberal with your stop orders. Don't go too close to the flag, just about that area or so. Be a little liberal so you don't get stopped out by the stop hunters. Okay folks, thanks for watching. That's it for this video. If you want more strategy videos like this, please click the like button and subscribe to the channel. Thank you once again.